Eugene, I mean, I don't know where to start. Do we start with international factors or do we start with local factors? If you're having to talk about equities right now, which do you think are more important when it comes to the local market?
Yeah, what looks like the local market has purely been driven by international events. You get the odd pop and top here and there, which is earnings or results driven, but I mean the global markets are definitely dictating whatever is happening, and it's shaking around, and it's just showing that there's a hell of a lot of uncertainty in the market and people are extremely nervous. If you look at the violent moves that we've seen, especially in the resource counters over the past couple of months, it just clearly reflects that the bottom-up facts are not close to what it should be.
Let's talk about, the bottom-up factors that could drive markets going forward, because we've had a number of companies in the States coming out and downgrading their earnings forecasts. Caterpillar, of course, was the big one yesterday. We also had FedEx and we had Norfolk Southern. Three of those big companies saying that the outlook going forward is murky. It's not looking good. Are we going to have more big cap companies coming forward like this? And what does this mean for stock ratings right now?
Well, what we are seeing happening in the market is that there's been a definite slowdown in economic growth, especially in the States, over the past couple of months, and that's going to be reflected in earnings over the next couple of months. The expectations of growth that the market had into the next reporting season has been downrated as we're speaking, and it's been the case over the past couple of months. So corporate USA, if we look at profitability, is actually extremely high. And it's purely due to the fact that they've, over the past year or two, that they've cut everything to the bone. They resized their business, and they need growth and turnover now to grow the businesses further. And the slowdown in Asia, I think, surprised the market a little bit more than everyone expected. The States is not really growing at the pace that everyone is expecting there as well. And there's a lot of indecisiveness. I think the political scenario is panning out in both the US and obviously leadership election in China is just putting a lot of capital spending and practical employment on the line for the next 3 to 6 months.
And it seems, I mean, with all the issues in the mining sector and the local economy, we're fearing what this might mean for investment going forward. But I mean, Australia is also in the same position. BHP saying that wants a 4-year extension to the approval of the Olympic mine dam expansion. And they're basically saying they were counting on this to help jumpstart their economy. But when BHP, the largest miner in the world, comes through and says this, does this once again reaffirm the fact that we're going to continue to see projects being halted? Is this going to have a positive effect on prices going forward, do you think?
Well, over the medium to long term, definitely. So the fact is that whenever these kind of companies invest, they want to see ROE, and they want to see it over the next, say, 3 to 5, maybe 7 years, realizing some of these projects are obviously longer than that. But there's got to be a realistic expectation of ROEs. What we're seeing in the global market is that there's a lot of uncertainty in terms of growth, in terms of supply and demand in the commodity markets. And if you look at certain regions like Europe, I mean, it can be very stale and stagnant for the next 3, maybe 5 years. The States is not expected to grow with any sexy numbers over the next 3 years, and Asia is growing okay, but it's slower than everyone expected. And I mean, if you just look at the reaction of things like, for instance, iron ore over the past month or two, the disruption in supply and demand created chaos. So I think the guys are standing back, they're reevaluating their projects, making sure that wherever they move capital into, that it makes sense, and that the it's not going to disrupt, but only complement supply and demand dynamics.
Let's take a look at the banking sector. Capitec today releasing results. Whilst we initially had a bump up in that stock, it fell back on the day by around R2.60. They're looking to this right issue, 2.248 billion rand. The price will be 160 rand. It's pretty much a 40% 40 rand discount to where the share closed today. Why do you think the market didn't like this news?
Okay, so maybe one can start with the results. The results are great. The company is doing exceptionally well. They're growing their assets extremely well. Cost control, very good. Bad debt experience, reasonably good. So all in all, results is what the market expected, maybe on the higher side of the trading statement. If you look at it over a 6-month period, the market actually expected the fee income to be slightly higher, but that was explained with their new products. Their transactional income has also grown spectacularly. So the business model is great, but the business needs a lot of capital. What was a surprise is the rights issue has been underwritten by 2 parties and nothing is done for free. So obviously that works a bit of a discount into the price, and it's very sizable for a company of this size. They sit with 100 million shares. They're going to issue 14 million shares to raise 2.2 billion rands. So it created a bit of uncertainty. I think when you look at this kind of issue, the question that I have is, why do you grow your dividend in this kind of environment? The answer most probably is that the dividend is negligible. My thought there is, so just don't pay dividends, use that as well. On the other side, you've got to look at what's the ROE expectations over the next, say, 3 to 5 years. We're most probably going to see a dip in ROE next year. It's not going to be substantial. It will most probably drop down to around 24-ish, maybe a little bit less, and then slowly starting to pick up as they expand the business model. They're in a very aggressive growth phase. But you've got to listen to what, for instance, companies like Able said also recently, as they're a little bit worried about their
Eugene,
business model.
I'm so sorry. I'm going to have to cut you off there. We've run out of time, but pretty much getting the gist of what you're saying right now. As you say, we're going to have that ROE affected in the short term. They are in a growth phase, but we will, of course, be tracking this Capitec rights issue story. Eugene Goosen, Portfolio Manager at ORA Fund Managers, joining us there from Cape Town.